Good morning, good afternoon, good evening, wherever you are, and welcome to this CoinDesk live webinar. Today's topic, CeFi to DeFi, DeFi to CeFi, trading opportunities across different market structures. This couldn't be more timely, given everything that's gone on in the last couple of weeks. I think everyone's looking for some explanations as to what's happened and maybe some guidance for what to do next. In particular, the market structures of both CeFi and DeFi have been through a real-life stress test, and there have been some casualties. So today we are going to discuss what this has shown us, what lessons we can learn, and more broadly, I think we're going to come to the conclusion that CeFi and DeFi are actually complementary markets rather than competitors. We have an amazing panel, so it is really exciting for me to be able to introduce the speakers to you right away. First, we have Annabelle Huang, who is the managing partner at Amber, the global digital asset group. Annabelle previously served as the Asia lead at Quant, a decentralized trading platform that enables peer-to-peer trading on the Ethereum blockchain. And before transitioning into digital assets, she worked at Deutsche Bank and Nomura in New York. Ed Go is the head of trading at B2C2, a digital asset pioneer, building the ecosystem of the future. He joined the firm in 2019 to build out B2C2's capabilities in pricing, execution, and risk management. And during this time, he's overseen the growth of the core OTC business and the launch of innovative new products. He previously worked for Optiva for 9 years. Ben Martin is the institution's business development manager at OKX, a leading digital assets exchange. Ben has more than 14 years of experience in the traditional derivatives market. He started his career in equity and evolved through various derivative assets and is now in crypto. And last, but absolutely by no means least, is Gabriel Bassas, VP of EMEA and APAC at Avelacom, who are our sponsors today. They are the low latency connectivity and data solutions provider to the crypto and capital markets. Over the past 7 years, Gabriel has been responsible for business strategy and portfolio management, and he's got extensive experience designing and building ultra low latency connectivity platforms for clients across the European, Asian, and US capital markets. So today we're going to tackle this topic in 5 broad areas. First of all, we're going to go into the recent market moves and what these actually mean for the market structures of CeFi and DeFi. Then we're going to discuss the relationship between CeFi and DeFi. Then we're going to look at the market structures of each. Fourthly, we'll then discuss whether there are arbitrage opportunity between the two systems. And finally, we're going to look at institutionalization with more of a focus on DeFi than CeFi. So that's enough from me. Let's get going. Let's start with the big question. What has just happened and how much has it hurt the development of the DeFi markets? Annabelle, perhaps you can lead us out with some insights from what you've seen at Amber.
Sure. Thanks, Nick. I would say it's been quite the week, to say the least. I think we started seeing equity-led broad market sell-off over the last week. And of course, the elephant in the room is what had happened to Luna and Terra ecosystem. I think it's unfortunate what had happened with, more than $40+ billion being wiped off the market from the Luna and Terra USD, which is the UST stablecoin market cap. Overall, I think right now Luna is trading essentially close to zero, and UST is at close to 9 cents. Quite a different scene from what we saw just a week ago. We do see quite a bit of the selling flows in altcoins on the desk here, and even in majors. I think now we're seeing the crypto fear and greed index around probably the all-time fear for support line at the moment. And I think also volume-wise, there was obviously a volatility spike over the last week, but now actually the volume has come down quite a bit as well. We sent out a survey over the last 2 weeks. We got some quite interesting results. The survey audience are mostly our institutional and some high net worth individual clients. I think 50% of them reckon that Bitcoin is going to test the 20K level again. And a third of them claim that they are sidelined, sitting on cash to wait to see what's going to happen, potentially thinking there's more room to go. Half of them still remain long, and the remainder, which is about 15% of them, are actually short in the market. So I would say that the sentiment has changed quite a bit, and it's not just in crypto. It's really quite kind of broader macro market as well. So yeah, we're going to see, potentially what's going to happen for the new cycle or the new months to come.
Ben, does that tally with your experience at OKX?
I'm pretty much in the same boat. However, I'd like to try and give a little bit of positivity, because I think it's very easy for us all to get tied up in, even looking at the main media, for instance. I know those that are close to me, for instance, last week were on the phone worried as to what was going on. And I think when we actually assess traditional markets, these things happen on a cyclical basis, of course, and it's natural that we're going to see such movements as well in the crypto space. And I think for that matter, it's really important to hone down a little bit on, the factors that are involved here. And as Annabelle stated there, that there are huge correlations, in my opinion, in terms of what we've seen in the last week or so in the crypto markets and equity markets. And I think if you look at the charting, let's say, if I don't know, Ethereum, for instance, compared to the NASDAQ over certainly the course of last Tuesday through to Thursday, for instance, there's real similarities here. And I think that we're beginning to see, again, a real correlation when the FOMC are coming out and, upping rates, tightening their belts, for instance. This isn't just going to be a classic example of, traditional markets being impacted. It's going to be us now. But I think to expand on that and to, as I say, give a little bit of positivity, when we look at them similarities between crypto and certainly the NASDAQ, you've got, the frontiers, if you like, on the NASDAQ, the progression that we're seeing in robotics from Google and Apple, which I think are the most technically gifted innovations we're going to see for some time. So I don't think all is lost in that sense. And I think if we look at the Luna situation, well, I'd like to think that most people that are listening and obviously on this panel are very much aware that the Luna situation is really a classic example of if you don't have the reserves, for instance, to back up the kind of trading volumes and the leverage, if you like, that you're taking on board. Well, unfortunately, that is going to happen. But again, liking that to traditional markets, we've seen it all the time, and I'm pretty sure we'll push forward, of course.
Ed, can I bring you in at this point and ask what you're seeing from a market maker's perspective, specifically around sentiment, to which Annabelle alluded, and maybe sort of belief in the future?
Yeah, so what we saw this week, I guess, was one of those super volatile weeks that tends to happen in crypto every now and again. I think Annabelle and Ben are right that the triggers, whilst Luna, everyone was focused on, was on that, there has been a backdrop of tightening monetary cycles, macro indicators and economics that have affected the whole market, not just crypto. And I think when we look at how the major coins, Bitcoin, ETH, have performed versus the NASDAQ and other broad-based indices, it's actually not that far out of line, given the volatility you'd usually expect from the crypto space. So I think that's one positive to take away. And really what we're seeing at BTC2 from our institutional desks and, where we are from most of our business in, we're really seeing that the volumes obviously spiked last week, but the conversations we're having and the volumes we're seeing going through the desks haven't really dropped off as much as you would have seen in a price action that you might have seen back in 2019 or 2018. And so, whilst of course the prices are lower, I think we're still pretty bullish on the market overall.
Great. Okay. Well, I think we've looked at the macro situation. Now let's get into the nub of the micro situation, and let's look at the relationship between CeFi and DeFi. How are they related? Perhaps Ed, we can stick with you at this point. How do you see the relationship between CeFi and DeFi?
I think it's a good question. I think obviously they come from slightly different beginning points. CeFi, you usually talk about the exchanges, you'd have a central exchange, the central limit order book where two participants one might place a buy, the sell, and the central exchange would take effective price matching of that, clearing, etc., and custody effectively of your assets. And on the DeFi space, you have effectively peer-to-peer matching of transactions. I think once you extrapolate that into the technological differences, the different risks, they start to offer two different propositions. I think one is highly innovative in the space of DeFi, where there's a lot of room to innovate. You have developers that have grown up knowing this from their 18s and 16s and teenagers, and they're working in that space, which I think is really cool. And then you have the CeFi space, and I'll probably extend that also to the OTC space, which is a more familiar environment that institutions can operate in. And things like ISDAs, bilateral agreements exist, credit frameworks are more familiar, and really you start to offer a certain size of scale that you maybe can't find in DeFi quite yet. And that's where companies like ourselves, we can step in and offer that size and scale within a framework that's familiar. And I think those are really the two core differences, but they both offer something to the space. And I don't think they're necessarily in competition at the moment either.
Annabelle, how would you respond to that? You've worked on both on the DeFi side and now in a more kind of CeFi type role. How do you see the relationship between the two? Are they complementary or in competition?
Yeah, I agree with what Ed said. I think DeFi is perfect, sort of the training ground for new innovation to happen, but still restricted to the on-chain space at the moment. But even that, we've seen tremendous growth. When I first got involved with crypto, starting in DeFi, there was virtually zero or very low liquidity because DeFi mostly relied on the very similar kind of the central limit order book structure, relying on off-chain market makers to provide liquidity, and that model has proven to be quite difficult until the more innovative sort of automated market maker model came along and really bootstrapped liquidity from there and solving a lot of the issues when it comes to trading really, kind of the tail end of the tokens where a lot of the centralized market makers, probably would not be willing to put a price on those things. So it's quite interesting how far we've come, and I think we're still going to see a lot more of the more crypto native on-chain innovations that come out of the DeFi space, and that might even drive a lot of innovation that we see within the CeFi space. Because like Ed said, right now, if you're looking at CeFi, right, a lot of us are still leveraging off of the traditional finance models in terms of agreements, in terms of regulation, in terms of a lot of the activities. But I do hope to see the DeFi space continue to grow exponentially. And when there's enough product, enough liquidity, then I think the two worlds will communicate a lot more than we see now.
Great. Gabriel, from your perspective, how are the two intertwined? And how do you see them working together?
Yeah, I think from the CeFi perspective, CeFi has been tremendously successful because it resembles very much so the mechanisms of traditional finance. And so it's accessible to the masses. And it's found a way of bringing buyers and sellers together with an exchange in an efficient manner. And how it does that primarily is it changes the model of how the exchange functions. So traditionally, the exchange was co-located in a dedicated data center, so to speak. That's still the case with crypto, although now crypto are based in cloud-hosted infrastructure, which has the optionality or availability of having elasticity of compute and hosting capabilities. So in theory, when markets are volatile and there's an influx of users wanting to access the exchange, being cloud hosted enables the exchange to deal with this. Also, having the elasticity of computing power means that the exchange can in real time control margin and risk assessments that can, counter some of the issues that we've seen in traditional finance in the commodity space we've seen recently. And so this allows crypto exchanges to be open and fully functional operation 24 hours a day across all time zones. So, if you look at the trading opportunities that allows, there's a low cost of entry. Now, pretty much any participant, any person with financial experience can set up a cloud-hosted virtual private computer, a node. They have access to network access, and so now trading opportunities are open to most for doing arbitrage, price discovery between different assets across different exchanges, geographies, market making capabilities. The trading opportunities are pretty much interchangeable. So what we see now, and that's a very successful model. It's been working for a long time. So now what we're seeing is the decentralized aspects, using maths and financial economic principles to built on distributed ledger technology, essentially replicating traditional financial products and services. So lending, borrowing, yield generation, synthetic derivatives, all programmed into smart contracts, all open source, all accessible to all. Perhaps some of the issues obviously around exploitation of code, exploitation in oracles, poorly designed infrastructure. It's sometimes easy to say that, but obviously you can't really know until you're being stressed. And then also, DeFi seems to be correlated to the macro economy. So it's calling itself decentralized, but it reacts to real world situations. But what they've done is they've created decentralized exchanges, completely transparent, completely on-chain transaction history, limits spoofing, limits any trading issues. Obviously, no KYC, no AML. That's a good thing or a bad thing, depends. Liquidity is often entered in by self-custody, and that has its own operational security issues. But as a liquidity provider to the exchange, gaining fees, you become almost you become a stakeholder of the exchange. So it's possible now for retail to become stakeholders in exchanges, which is something we've never really seen before. Volumes are now currently shrinking, but we'll see how things develop. But from the trading perspective, the opportunities that are around, there are price discrepancies between exchanges. Well,
we'll come on to that.
We'll go on to that in a little more detail, but yeah.
We will, yeah. I think now, the interesting thing I find is that the way that the CeFi and DeFi markets are structured can affect what investors can actually do and what they can expect to achieve from participating in each market. Ben, perhaps I can come back to you. What do you see are the trading opportunities between CeFi and DeFi?
Yeah, absolutely. Well, I think Gabriel just touched on something there in terms of from an exchange perspective. There's certainly ARB opportunities that I think pretty much everyone's going to explore. But I think in terms of but before we get into talking about arbitrage, etc., we've got to really appreciate the positivity again between the two of them. I think in the sense of whether it be again from very much an exchange perspective, whether it be the KYC situation with DeFi and CeFi, that there is none through DeFi, so we're going to probably look to use the two, if you like, and there to be that journey between the two. I think you could also delve into the fact of the problems in terms of having some kind of web-based wallet as well. I think that CeFi will really help there.
Annabelle, perhaps I can come to you to fill in where we left off with Ben. What are the trading opportunities between CeFi and DeFi? Specifically looking at similar assets on an arbitrage basis, or is there something more structured that one could do based on both yield and appreciation, something like that?
Yeah, I think now that I touched upon earlier that in terms of DEX liquidity, it has grown tremendously. So there is actual sizable arbitrage opportunities now exist between centralized exchanges and decentralized exchanges. I think now mostly concentrated around spot, just because a lot of the more derivative-based products on decentralized exchanges are not that liquid yet. But I think that's also room for further development there. What we at Amber Group, we've actually been involved on the DeFi strategy side quite early on. Been one of the largest market makers on DYDX, seeing their growth as well, and a lot of the later on that the DEX aggregators that came onto the market as well. And for us, we also incubated a DeFi project called KeeperDAO that concentrates around on-chain arbitrage and liquidation opportunities. So I would say there are a lot of arbitrage opportunities within DeFi, within purely on-chain, and there's of course the kind of the crossover opportunities as well. And I think for a lot of us, we spent a longer time running more kind of CeFi concentrated arbitrage. But like I mentioned earlier, I think there is going to be more opportunities within the two worlds.
Great. Ed, is that what you're seeing and what your clients are telling you?
Yeah, I think whenever there's an asset that transcends across two exchanges or two ecosystems, like one CeFi, one DeFi, there's opportunity for arbitrage. And coming from a trader's background, you're always going to find a way to monetize that. And whether that means getting lower latency, like Gabriel touched on in TradFi, that was a big topic, or in the DeFi space, understanding how the protocols work in oracles and how the blockchain transacts them, and potentially using that to an advantage. That's kind of like the trader's role, and it's kind of there's a positive to that it brings efficiency to the market and stability, and that's one of the key things that at BTC we always try and look for, is drawing all the different liquidity pools, obviously our large client franchise, and translating that volume and flow that we're seeing into stability and being able to provide liquidity throughout 24/7 market conditions. And that kind of really brings us back to the Luna event of last week, when I think operationally a lot of the companies and everyone in the crypto space was just thinking, how were their systems performing, how is their architecture performing, how are their trades being built, and how are they maintaining service to their clients or customers or retail users. And I think that's something across CeFi and DeFi that you have to tackle, and that really brings it back down to the arbitrage as well, because if you don't have stability of your systems, it's very difficult to perform high volumes of arbitrage. And how you tackle that between the two ecosystems can be something that traders put a lot of value on.
Absolutely. Ben, do you see trading opportunities between CeFi and DeFi? And if so, where are you looking? Where are your clients active?
Yeah, well, it's very hard, I suppose, for me to speak on behalf of all of our clients, because I'm only really seeing one side of things. But I think, as has already been touched upon, and coming from that TradFi background and environment, let's be frank, if there is that arb opportunity, whether it be between whatever the platform, whatever the product, then those that, I'm not saying just come from a traditional background, but from a broking background, are always going to be there sniffing it out. And I think on that note, your systems and controls for that matter have got to be absolutely impeccable. And I think that's something that we can reflect on a little bit, and in a slightly different situation to last week when everything was happening with regards to Luna, or whatever you want to blame, if you like, for the falls that we were seeing. And that was one of our real, well, that was our only, if you like, aim at the time, was just to make sure that our risk management and our risk engines were all intact and running smoothly. Because if we're doing that, and that's just from a risk perspective, then we're okay, our clients are okay, whatever side of the market they're on. And I think that's also reflective on a trading perspective, and from a kind of maker perspective also.
Yeah, I mean, it stood the test, didn't it? I mean, the markets, although the prices moved, they're very volatile. The actual hardware all stood up.
Yeah.
Gabriel, what's your take on as the latency provider for potential arbitrage? the differences between latencies between CeFi and DeFi are enormous. You know, can you actually go across the different structures between the two with any kind of speed?
Yeah, so Avelacom got a pretty unique visibility on this perspective, in that we own and operate a global fiber optic network that connects into data centers, into financial exchanges, has been used by the world's leading proprietary trading firms and investment banks, for the sole purpose of being able to get market data quicker than legacy mechanisms, by using networks that are shorter in distance than some of the other networks on the market. So that naturally lends into the geographical nature of where the centralized exchanges are based. Naturally has discrepancies in prices across the different assets that can be picked up if you're using a sophisticated network that allows for smart order routing networks to be able to identify these price discrepancies. And so what we've done is we've basically integrated our fiber network into AWS. So as an AWS user, you have the availability of using the Avelacom network natively. And so some of the conversations I have with the new customers, I would say probably around 80% of them are already trading crypto, and they are already within the AWS environment. So it becomes very easy to onboard a lot of these customers. And so there are effectively three ways to do arbitrage in AWS. One is to use the internet. It's a freely available, well, not free, but available resource within AWS. Allows you to route between one centralized exchange and another. Throughput, jitter, latency aren't really optimal, so that's not really something we recommend. There's another option. There's using the AWS backbone that allows you to interconnect between the different exchanges. Most of the crypto exchanges are on AWS, so that's a relatively useful option. And then the third option is to use the Avelacom private network that guarantees low latency networks and is available to turn on within 24 hours notice.
Okay, I think we're going to move on to the next and the fifth item of discussion before we start tackling all these questions that are coming in. And this is really about institutionalization. It was mentioned right at the beginning that DeFi tends to be younger, more innovative, more of a retail issue at the moment. CeFi is more, should we say, mature, and has more institutional involvement in it. Given the events of the last 2 weeks, how can institutions find any confidence really in DeFi protocols? Can you package DeFi for an institutional market? Annabelle, how are you doing this?
Sure, no, that is a great question. I think if we kind of take a step back and just look at the risk associated with trading on a CeFi platform versus DeFi, right, and sort of the requirements on the infrastructure side that's needed. So I think CeFi has been battle tested maybe for a slightly longer period of time. I think I just looked at today's date, right? Exactly a year ago was what happened, the 2021 May sell-off, and more than 2 years ago, March of 2020, right, was another global liquidity crisis event. And I think during, and not to mention, earlier on in 2018 sell-off, and the market within CeFi structure has matured quite a bit. I can remember the days where we're not even talking about network latency, but is the entire exchange is being shut down, and right, and that was 2018 days. But we saw over the last week, I think mostly, right, we've come a long way from there. On the DeFi side, then the risk is slightly different. And a lot of times, right, it's sort of the smart contract risk. Also on the Oracle risk side, that is also new to a lot of the players in the field, and we have to go through these cycles to almost to expose any faults in the current design, and really to grow from there. I wouldn't say Lunatera was one of that example. I would say that the design was clear, transparent from day one. But I think other unrelated risks, right, it is more on the smart contract, the Oracle side. And I wouldn't say DeFi right now is purely for retail. I would say we are seeing a lot of very sophisticated players that are building the bots to arbitrage on chain, utilizing flash loans and doing a lot of the trades that way, and setting it up properly on the infrastructure side, where a lot of times running different validator nodes directly on the network, or monitoring mempools and all of that. So I think some institutions are probably already behind it. The institutions who probably have less of a constraint to be able to plug in directly to the DeFi ecosystem. But I think now a majority of the institutional players are still quite constrained on that sense. They have to face a counterparty. They have to be able to KYC and know who they're trading with. So oftentimes, I think platforms like Amber, we step in and come in between, where we interact natively on chain, but act as the centralized platform that trades against all the institutional players. So I think, it's probably similar to a lot of the panelists here as well. And I think we want to be the gateway such that more institutional money can flow into the DeFi space.
Very interesting. Is that your experience as well, Ed?
Yeah, so exactly similar to that. So at B2C2, we don't actually trade directly on DeFi because of the reasons Amber mentioned in regards to KYC, etc. But and that really then extends to what we offer to our clients. But what we do try and do is bridge the benefits of DeFi, how it impacts the overall market in terms of yields, things like that, and then create products that really do benefit our eventual client base, which is definitely more institutional, going towards facing the TradFi. So for instance, we launched the dual digital asset investment recently that was approved by JFSA, and that's offering yields similar to DeFi. So I think there are ways that you can get some of the benefits and the yields of DeFi of actually being in the space, because there is just crossover into the CeFi and TradFi space as well. And I think whether that continues, I think it's going to be difficult for a lot of institutions to get over the KYC element that DeFi currently lacks in the most areas, although there definitely are pools and liquidity pools and areas where institutions can KYC and then operate on a blockchain transaction smart contract era, which I think is definitely one cool area of DeFi. And I think if you extrapolate what the oracles are doing and the smart contracts are doing themselves, there's a lot of technological advancements being made there that can be really productive for the industry as a whole, not just in crypto, but in TradFi and other areas of institutions outside of finance and markets. So I think the concepts are great. It's definitely an innovative area, but it's not something for everyone at the moment.
I mean, there is the question of whether or not DeFi actually will benefit by the presence of institutions. Institutions have an ability of swamping a market, bringing down yields, exposing floors, and it's that maybe DeFi doesn't need institutionalizing.
Yeah,
Gabriel,
yeah, that's pretty much echoing my points here. I mean, obviously, you can't have stable coins losing their peg. You can't have code or Oracle exploits. You can't have investors losing money unnecessarily. But really, I would say DeFi doesn't really need institutional support in the same way traditional finance does. What DeFi needs really is to remove exploitations, protect against attackers, remove liquidity dependency from volatility, especially. And so, what does that look like? Does that look like regulating or frameworks around, code, DeFi code? Does that look like frameworks around, usage of stable coins? However it's done, DeFi, delivers attractive, financial products and stability and peace of mind. So I would say that if it's done right, and by default, mass adoption will be guaranteed, and that by default will bring in, the traditional markets. Really, I think instead of trying to bring in the traditional markets, I think traditional markets should really use their skill sets to really build DeFi, using the skill sets, using the expertise they have to build and design protocols, to build and design a future in which traditional finance or decentralized finance is available to the masses. So, it's maybe a different way of looking at it, perhaps.
Absolutely. And decentralization doesn't necessarily mean no brokers. It's a hugely complicated area. And I think it can actually benefit from institutional quality middlemen and women to allow greater participation in DeFi. It doesn't mean that there doesn't need to be players involved who are of a institutional size. So what I'd like to do now is start asking some of the questions from the audience. We've got a whole bunch, and understandably, a lot of them are about what's actually going on in the markets. So slightly off topic, but that's fine. So the collapse of Luna, does this undermine the credibility of all algorithmic stable coins, i.e. the method doesn't work? And then a follow-on question, how much reserves should Luna have held? Is there actually a number there? Ben, perhaps we can start with you.
Very, very good question, and I wish it was as black and white as the question is sounding and is put to me. No, I don't think it's decredified anything. I think this is a natural process, if you like, when you consider the infrastructure and the place that Luna were. They, as we'll be aware, had big reserves in BTC and Ethereum, and obviously their main focus was to protect UST. So what do? It's almost a fire sale, and I think the way that they were essentially set up and conducted was not ideal. But we've seen that in times gone by, and again, traditional markets. We've seen it in crypto, and we see it in ordinary life. So I wouldn't suddenly say that's it. We throw the towel in, so to speak. Sorry, just to evolve, what was the next part of the question, Nick?
The second, how much reserves should it have held?
Oh my goodness. I'm going to ask you that actually, Nick, because I can't honestly answer a question like that. But I would say that if you're in a place where you've fallen, let's say 98.5%, 99%, you've got to the point where the Luna Foundation guard, who I think it is, making these decisions from what we've all heard. I can't say that's 100% true. That's just what we've all read and heard. To sell pretty much everything, surely that puts you in a pretty bad space. That's all I'm going to say. I can't sit here and say 50%, 15%, 10%. I'll put it out to the panel and see if anybody else has a more specific figure in terms of what they would like to see.
Well, all I'd say is from a mathematical point of view, the more the price falls or the more it gets towards one, let's say, the more reserves have to go up. Yeah. If it goes to zero, then you're talking about infinite reserves. So, there actually isn't a number there. No. So it's a question of maths, really. And it's this interplay between maths and I suppose sentiment, in exactly the same way that the banks don't hold all our money. They've lent it all out. And if we all go to it at the same time, it won't be there. So, these things do take a little bit of faith. Okay, next question. Are governments going to actually permit the existence of a DeFi sector? Gabriel, I'd like your sense on this, given the global footprint that Avelacom has.
Yeah, the question here is that crypto in its nature is cross-border. So it would require a global effort in which governments act together, in which to change crypto. Because right now there are some nations that are in favor of it and don't really want to regulate, and then there are maybe some that are willing to do that. So it's the difficult thing is sovereignty and the cross-border nature of crypto, which probably works in its favor. So we'll
is this amplified in the DeFi context?
Well, the thing is, in the DeFi context, there's no KYC or AML, or at least with the centralized exchanges, data can be shared with tax authorities, government authorities. But when it comes down to hosted wallets owned by institutions or individuals, that becomes a very, very difficult task. And so I'd be curious to see how that develops. But I think one way in which it moves in that direction is certainly, I think, something we're seeing around the stablecoin debate, stability in the crypto market, something that everyone wants actually. No one wants to lose money in volatility on the crypto asset, but then also lose it on a so-called stable asset. So therefore, everyone is incentivized to sort that out. And so that could be a way in which frameworks are introduced, but we'll see.
That actually leads us very nicely on to the next question, which is the original premise of crypto, especially BTC, was that it was not correlated to other traditional asset classes and was actually a hedge against inflation. Based on last week's movements, can we still say this? Annabelle, what do you think about the old question of correlation and hedge and everything?
No, I think that's a great question. And I think we are seeing, at least over the short time period, Bitcoin and the macro market being highly correlated. I don't think it discredited Bitcoin or crypto in general as as being totally correlated with the traditional market going forward. But I think it is common, especially in a more global liquidity crisis or kind of a risk off sentiment, that all the risk assets tend to move in tandem. But I think it's actually a great positioning right now. A lot of the leverage being cleaned out, the positioning is much healthier. So if there were to be decoupling, and I'm actually having a lot of the similar conversation with my clients these days, where do people think it will happen? Do you think Bitcoin will outperform the equities market, a fixed income market, or vice versa? And I think a lot of them actually tend to want to diversify further into crypto if they haven't yet, and mostly to Bitcoin, which has proven itself over more than a decade to be the major crypto asset, to be a hedge against inflation, that to be played out over a much longer time period. So we still believe in this over the long run, but over the short run, especially when there is a shock in the global markets, then it is not uncommon to see a move in tandem.
Okay, fantastic. Ben, if someone wants to use DeFi for the first time, right now they have to on-ramp via CeFi by converting their fiat to crypto and moving it over. Will CeFi always be required to enter into DeFi?
Again, a very, very good question. I can't see it changing anytime soon, but I think we have to give DeFi the chance to grow, and I think use the opportunity and the kind of friendly nature, shall we say, but between the two that we have and we believe in at the moment. But I think going forward, as we do see that growth in DeFi, and I'm talking years down the line here, then I think there will be a place and a process to onboard directly.
Okay. Very interesting question. Let me just check here around CBDCs. How are the arbitrage opportunities likely to impact CBDCs, as they are effectively a DeFi type product on a centralized platform? Ed, how do you see arbitrage opportunities for CBDCs?
I think it's going to be similar to any arbitrage, where you look for price discrepancies across exchanges. In crypto, you have something that's quite unique to crypto, which is triangle arbs, where you can trade BTC, USDC, for instance, USDC, ETH, and then BTC, ETH as a whole triangle. And across the different venues, some will be in DeFi, some will be on CeFi exchanges, some will be via LPs like us, and that arbitrage mechanism just keeps the market efficient. So I think it's going to happen, and if stable coins evolve into something new, then arbitrage will just follow it, really, as normal market forces maintain.
Okay, what are the major competitive advantages of decentralized derivatives markets over centralized exchanges? And related to that, do you see composability being important in the future?
Yes, I think decentralized derivatives, in terms of margin, I think it comes down to what is the derivative and what's it for. It's to allow you to trade with leverage. I think margin and stability is always important. We've seen you know, in the flash crashes of March 12th and 2020, you know, the deleveraging that occurred of retail accounts. And I think how that's implemented is really the key between the two. I wouldn't say that's particular to CeFi or DeFi exchanges, but that can affect the whole stability within those ecosystems. And if those are implemented in a weak fashion, or that doesn't really protect the end user, you can find that people lose trust in those exchanges or areas. That we have seen in the past with certain exchanges.
Okay. Do you think a decentralized off-chain clearinghouse can actually help the liquidity fragmentation and ultimately lead to better order flow and increased market depth, as it allows an aggregation across smaller market makers and market takers? Annabelle, is that a concept that you think could work, or does that actually just go against the whole ethos of DeFi?
Yeah, I'm still trying to wrap my head around a decentralized off-chain clearing. I think I might need a bit of clarity on that, because I think one of the benefits that DeFi has is perhaps it can access the clearinghouse itself on the smart contract directly on chain. So if it's relying on anything off chain, then that's probably closer to a centralized clearinghouse model, to my understanding.
Great. Okay. I'm just going through, the questions keep on coming. It's fantastic. There are obviously lots and lots of you who are watching this today. Let me see. What is the optimal way to connect to CeFi market hosted in AWS using Avelacom in case the client hosted in the same AWS region? Does Avelacom have any IPsec tunnels to CeFi market infrastructures that can help with same region connectivity latency? Gabriel, I think that one's for you.
Yeah, absolutely. So let's say you are looking to trade between Bitfinex in London and Binance in Tokyo. Essentially, what you would do is you create a VPC in London and a VPC in Tokyo. And then there are some steps in which you would integrate with the Avelacom network. And some of those steps are, sharing your AWS ID, Avelacom sending a connection request through. There are some settings that you need to activate in AWS, route propagation settings, VPG settings. And from that point, you've now established a connection and you're able to send an IP address from one location to the other. This time you're using the Avelacom network in which to transmit your IP addresses. So that would be an example of a point-to-point scenario, but you can now create VPCs in all the different locations. And with that in mind, then use the same strategy to connect between the different VPC zones and effectively build a smart ultra-reading network that has ultra-low latency capabilities.
Okay, fantastic. What is limiting the amount of on-chain liquidity? What exactly is missing or wrong? Ben, what do you think is holding back liquidity? Is it fear? Is it the example of what's just happened? What do you think it is?
Well, it's a mixture. I've got to apologise first and foremost. I didn't hear any of that about 2 moments ago. But yeah, of course, it would be the usual market players, as you say, in terms of fear. And I think when you're looking at a product or a relatively new, if you like, entity in the form of, let's say, DeFi, where there is a little bit of a lack of volume, when we see situations occurring, as we have done in recent weeks, and I think if you pop all that in a cauldron, you're only going to see one thing, and that is, as we've seen, a real lack of volume dripping through, I'm afraid to say.
Okay. If I could add on to that, because again, this is a topic that's been close to my heart for many years. I would say liquidity oftentimes comes from natural supply and demand. The reason that FX is highly liquid in spot and also derivatives market is because there are people needing to conduct cross-border payments or to hedge, right? All the multinational corporations or even the sovereigns, and that create a very liquid market. But right now, since there is a lot of bottlenecks around on and off ramp when we're actually talking about how to on ramp to DeFi and then off ramp to real world. There's still a huge disconnect there, which is making the supply and demand side purely on chain quite limited. If we're able to see mass adoption, maybe it comes in the form of games or some other kind of incentivizations, such that people are actually having that sort of scenarios where they are interacting on chain very frequently and doing things, paying things, buying, selling, then I think that will naturally increase liquidity a lot. And I think that also leads to the issue right now, which is the UI UX side, right? For a average user, it is still quite difficult to interact directly on chain. There's a lot of very daunting steps, even though it's much better than perhaps what 4 years ago looked like, but still, I think most people will find it difficult. So I think we are now probably at the Web 2.0, 2.5 stage, right? And we need a lot of the players to build the gateway tools such that the Web 2 users can seamlessly on-ramp to Web 3.
Well, I think that leads us very nicely onto the last question that's come in. In your view, when or ever, will DeFi volume actually ever overtake CeFi volume? Does it rely on, just everything going Web 3, all activity going digital? Do you think it will happen, or do you think there will be a coexistence?
I think maybe if you add different use cases, so you say DeFi for the financial purposes of decentralization, but what about other use cases for communications or other verticals of value, so to speak? So I think maybe that's not so much volume in terms of financial volume, but use. I think certainly if you change different verticals.
Well, in a way,
I think if we believe in everything going digital, right? So it's not just the financial assets; it's everything. The live stream today, the data on all of our activities, and that could all become a tokenized asset, and that's all part of the DeFi ecosystem.
Exactly, it's the financialization of everything, and then everything being essentially assigned a value, having liquidity, being fungible to an extent. These things, it could happen. It absolutely could happen. Well, we are running right out of time, and I'm very sorry to all the people whose questions we didn't manage to get to. I think we covered a lot of them. So the ones that we didn't get to, I think were covered either in previous questions or during the main event. I think we have learned an enormous amount today, both about what's happened in the market, what the sense of sentiment is from the clients of our panelists, which I think has been hugely insightful and very timely as well. I think we discussed the relationship between CeFi and DeFi. They are complementary. They're not seeking to attack each other, and they're not seeking to replace one or another. We have looked at the issues around the fundamental structure of both markets and why this, at this point in time, might mean that DeFi has got less institutional ability than CeFi. But overall, I think we leave here now better informed than we were an hour ago, for which I would like to thank so much all the panelists. You've been absolutely wonderful. Thank you to all the viewers. Thank you so much for sticking with us and for submitting all these great questions. It's really brought the session to life. So that's it from us. Thank you again to all the panelists, and goodbye.